presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compact Market Wrap YouTube update for December the 2nd, 2024. I'm Moe Ansari, President of Compact Asset Management, and thank you for joining me today. First of all, don't forget to subscribe to this channel so whenever I post an update, you will be notified. It is absolutely free. Just click on the subscribe channel and you will get these updates whenever I post them. Looking at the markets last week, Thanksgiving week, I hope all of you had a wonderful Thanksgiving. It's my favorite holiday of the year. Have a chance to get the family together, always exciting, always interesting to see everybody's opinions. And you do hear them at the dinner table, but it's always wonderful to see everybody there. So I hope you also had a wonderful, wonderful Thanksgiving. And a lot to give thanks for. S&P up 28% as of Friday, tacking on a little bit more today. Last week we gained 1.08% in the market. Wonderful day for the S&P. We saw the rest of it also continuing to move higher. And we saw it go up about 1.8%, so that was great. Dow was up 1.04%. Russell also up 1.19%, and 1.44 for the Dow, and the NASDAQ up 1.14%. Even though it was a holiday shortened week, half-day trading on Friday, Thursday, obviously we were closed, so still a good week for the market. New all-time highs above 6,000, and we continue to march higher. That is the question now. So many people are asking, how high can we go? Well, we have the forecast from Goldman Sachs for next year, and I'll show them to you, what they are looking for. Looking at, first of all, the sectors that did consumer discretionary was the gaining factor. And we did get sales on Friday, and Black Friday sales were a little bit better than expected. So consumers are happy. They're starting to spend money, which is a good sign. Energy was the worst sector, which I think could be headed lower because we are getting signs. There was a ceasefire agreed between Israel and Hezbollah or Lebanon, and there might be another ceasefire in Gaza. Hopefully that does happen, and that will be good. We're starting to hear talk of how we could get a ceasefire in Ukraine. That, I think, will take a little bit longer to get there, but I think we might be able to get that done also. And if that does happen, I think it'll be very positive for the markets overall, but I think it might be pretty negative for the energy market because that was what caused, remember, when we had the invasion of Ukraine, market went up to $132 a barrel was the high that we hit, if I recall correctly. That is what we saw there. So that could take some of the pressure off the oil markets, and we could see oil come down quite a bit. And I'll show you the charts where I think the expected low is. I don't know if it'll go that low, but that's where the Fibonacci projections are coming in. Looking at oil down, and we saw also the market, the big mover was the 10-year Treasury, which went 4.41, which was right at resistance, and I'll show you that chart. 4.49 was my first resistance. We kissed it, dropped all the way back, and today we're below 4.2, below the 200-day moving average for the yield on the 10-year. As interest rates come down, that is usually positive for the market, and if we do get an interest rate cut in the next couple of weeks, which is a 50-50 chance or 60-40 chance that we will get an interest rate reduction. If we do, I think that could be also positive for the market. Looking at the projections, these are the Goldman Sachs projections. Price level, year to date, this is the range that they're talking about. Forecast is 6,500 for the S&P. Interest rates, 10-year, expected to go from 4.4 to 4.3, even though they're expecting a 1.2% reduction in the Fed fund rate, which is for 4.6, coming down. But they're not expecting the 10-year Treasury to come down a lot from where we are right now. That's an interesting, that even though the Fed could cut rates, but the long-term rates might not come down, depending on how the budget negotiation goes with the incoming administration. What are they going to cut? how much can they cut out of the government spending? And if they can bring down government spending, I think that would be very positive overall for interest rates, because right now there's a lot of concern that we might get tax cuts which would increase the deficit without getting the cuts in government spending. If we do get government spending with the tax cuts, that would be even more positive. But even even just government spending coming down would be very positive. We'll see how that plays out over the next year or so. Looking at information coming out, ISM came in, consensus was 4.7. We actually 47.5. We got it at 48.4, still below 50, but that's what we saw. So was expected to be up 0.2. It is up 0.4. So that is also slightly better than expected. So we're seeing economic news come out slightly better than expected. So the economy continues to move along. We do get unemployment data, which is going to be very interesting to see how that comes out. Expectation is that unemployment rate is going to come down by about 4.1%. Last month, if you recall, we had a very small number on the non-farm payroll, the amount of jobs created. This month we're expecting, the last month we are going to create about 200,000 jobs. Last month it was affected quite a bit by the hurricanes that hit Florida and also the strike that was going on with Boeing. Both of those took the numbers down for the number of jobs created. So we'll see if we do get 200,000. If we get a number much below that, below the 200K, if we get any number close to less than 200, I think that'll solidify the expectation that the Fed is going to cut rates at the meeting coming up at the middle of this month. So we'll have to wait and see. That's going to be the driving number, I believe, on the decision making by the Fed. Looking at the technicals, we continue to move higher, but we're seeing this fifth wave, wave 5, which is projected to be up here somewhere, but we're pretty much as we can go, but you know, these waves can extend, and we might see, instead of this being wave 1, this could be wave 1, this could be wave 2, and this 3 could be negated, and this might become a 3 if we continue to move higher, instead of the 1, 2 that we have here, which is pretty tight right here. So we could see this extension right here if we got much above the 62, 6,300. We'll have to wait and see. But support now is around 59.46. That's the 20-day moving average. Then the 50-day moving average is 48.46. But what makes me more positive is that we're seeing a 3 here on the weekly charts. This is a long-term chart. As you can see, it goes down back all the way to 2020 right here. This is 2020. So it goes all the way from here, from 2020, all the way to where we are now, 2024. So it's about a 4-year chart. Each one of these vertical lines, green and red lines that you see, is 1 week of trading. The previous chart that I was showing you was each one vertical line is 1 day of trading. So this gives you a shorter term picture. This gives you a longer term picture. So we could see wave 4, and if we do, then we could see the 5th wave rally continuing to the upside. But again, once we get these wave 4s, they could last. Even though this was a small one right here, it was 5-6 weeks. As you can see, 6-7 weeks on the downside. So if we do see some pullback right here, it could come down to 57.17, or this line is moving up the 20-week moving average to about 57.50 to 5,800. We are at about 6,050 this morning. That's where we are trading as we go into the close. NASDAQ daily, again, this has become a 3 now instead of a 5 that we were seeing earlier. So we could see a pullback down to about 18,000. We are at 19.4 this morning, continuing to move up nicely. And the 50-day moving average is 18.5 or 18.6. Weekly charts, this is one that worries me a little bit. So it shows me that we're fully priced. We're looking at wave 5. But usually the wave 3s are the longest waves. This, as you can see, is coming in as 3, which is a shorter wave, and wave 5 is longer. So I don't know if all of this could become wave 3 and wave 4 to the down. We'll have to wait and see how this plays out over the next few weeks and months over the next couple of months. But overall, nice day in the NASDAQ, up about 1% today, or about 0.94. That I was talking about, this was the resistance at 4.49. We got exactly there, just a little bit higher, and we've dropped back. Then we gapped down here. That's positive below the 20-day moving average. And today we're sitting below the 200-day. This magenta line right here is the 200-day average yield on the 10-year bond. That is at around 4.19. We're trading 4.19. The 200-day is 4.207. So we're even below that. We could see a little bit more on the downside if we break below 4.16, which is the 50-day moving average. Then I think we are basically went up here. Now there we'll come back in a range, and we just might go back and forth for a period of time. Small caps, again, same thing happened. We got up to the 242, 245 area right here last week. This is a weekly chart, and then we dropped back from there. So are we able to break above this? We'll have to. I think we should be. As you know, I've been pretty positive on the small caps for some time. I still feel the small caps could do better in the incoming administration, because the large companies, if you do get tariffs, they're affected more. Small companies usually do business within the United States, and those will not be affected as much, and it could be positive. Also, if you get a rate cut from the Fed at the upcoming meeting, that also could be positive and could propel us to the ultimate target that I've talked about for since last year of 258 or so to 285. That's the target on the upside. That is a Fibonacci projection from this high. We get the next high, which should be projecting up to here. Today I have a crude oil again breaking below. We touched the 200-day right here, fell right back from there. We're below the 50-day now, below the 20-day moving average. This is the low right here, 65.27. We're trading at 68.08 today. So I would not be surprised to see it come down to this level. If we break much below that, then we have a Fibonacci projection all the way down here below $60 a barrel. That, I think, will only happen. Technicals don't work as well on crude oil because they're really pushed by fundamentals, by geopolitical events. It's a global commodity. What happens in China? How's the economy doing there? What's happening in the Middle East? What's happening there? What's happening with the Ukraine-Russia war? All of those things impact oil more than anything else. So we have to look at global events more than technicals on the crude oil market. Gold, we saw the fifth wave top right here, broke below the 20-day, broke below the 50-day. Now we're coming back up and testing it. This is wave 1, 2, 3. This could be 4 before we see the fifth wave to the downside. Long support is right here, about 24.5, I would say. This is the 200-day. I think if you don't have gold, that's what I would be looking for. But the new gold has become Bitcoin. That is where people are storing wealth now. I talked to a lot of the younger people, and they said, gold, that's old. The new gold is Bitcoin. So I thought I'd include the chart. The incoming administration is expected to be very positive towards cryptocurrencies. So I thought I'd for once put in a Bitcoin chart. This is the ETF IBIT for Bitcoin. It shows that once we gapped above here, right here, this was the resistance. Right here, we had touched this a number of times, came up and we gapped up right here. Then we gapped above here, and that was the breakaway gap. Once we got above 42,000, we're pushing now somewhere around 100,000 for the Bitcoin. But if we do see a fourth wave pullback down to about 50, if you do want Bitcoin, a lot of you call me, that would be where I would look at from a technical perspective. Not making a recommendation, that's where I would look at the technicals. We're at 55 on the IBIT this morning. So about a 10% pullback would be good if you would bring us. But again, this is going up very rapidly. So this red line could continue moving higher. And we could see it right around here, somewhere around 52 or so, just below 52 for the IBIT. Those are my thoughts. Those are my observations. Again, if you want a much more detailed view of what we are thinking, what we're doing, tune into the podcast. Javed and I will do that today, where we are going to talk about it in a lot more detail on what I just talked about. Again, if you would like to subscribe to this channel, click on the subscribe button, and whenever I post an update, you will be notified. Thank you for joining me today. Again, I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.